In 1440, a guy by the name of Johannes Gutenberg invented the Gutenberg printing press. That was 1440 AD. And why I'm so interested in this is how it changed people's behavior. Before 1440, if you wanted to get your opinion out to people, you would tack it to the front door of the pub or of the church. And passerbyers could read it, and you'd have um, you know, a 1 to 2 block, 1 to 5 block radius of people getting your information. And then the Gutenberg press was invented in 1440, and all of a sudden you could take your information, your beliefs, your opinion, and spread them much farther. And a guy named Martin Luther was one of the first people to use the printing press, and he spread his opinions about religion and whatnot. And the interesting thing that came from the printing press was isolation. People started to find more and more people like themselves. And when they did that, it led to wars, really bad wars. In fact, there was a 40-year war in Germany where the printing press was invented that killed a third of the Germans. So what's so interesting is the printing press allowed other people to meet other people who had similar opinions, and that then further isolated them in that opinion or that belief or that behavior. Fast forward 500 years-ish, and you have the IPO of Netscape in 1995, which let me just call that kind of the contemporary beginning of the internet. And what the internet's done is further create isolation. So now people who are fanatics or have some sort of very archaic or weird or unusual hobby or opinion or belief, they can now go on and find other people like that, and they can go down this rabbit hole where only the people on that website believe the same thing they believe. Fox Business News is an easy target, right? Conservative thinkers, anti-liberal or anti-left, people go to Fox Business News and all they get is the same sort of right-leaning type of conversation. I'm not saying that's good or bad. I'm simply saying it creates more isolation because you're now within this conversation and you don't get outside opinions, beliefs, behaviors. It's all the same, which creates more isolation. I find this interesting because this is what is going on in the investment world. There is more information. There are trading platforms. The trading commissions have dropped precipitously. You can buy index funds. And yet every piece of data that comes out says humans are not increasing their returns. In fact, the returns are getting worse. And it's because of this isolation. If you believe gold should go to $10,000, you're going to get on a site like King World News where all they talk about is gold going to $10,000 and nothing else. If you believe the dollar is going to back to 2001 levels, you're going to end up on a investment site that believes in that. If you believe in penny stocks, day trading, options, forex, currency, it doesn't matter. You're going to further and further isolate yourself and be within that conversation. I bring this up because it leads to my theme for this weekend. And it's one that I think you might find interesting. Hey everybody, this is RC Peck, and this is my weekend podcast. And the theme for this weekend is without the noise. Now, the other thing that came from the Gutenberg press was noise, lots of noise. This even became even more noisy with the internet. Every day there is 3 terabytes of data that gets produced on the internet. It's hard to put this in perspective. The human brain can store 1 terabyte. So 3x of what the brain can store is getting produced every single day. Most of that is very noisy, very opinionated, with very low quality of how it can actually help anyone. But it is getting produced every day, and it creates an amazing amount of noise. Now, we're speaking, usually, about the investment world. And so what I'm always looking to do is, how do we eliminate the noise? How do we get to what really works? And that's what led me to studying price. Because I found that if you can study price and understand which direction the price is moving of the S&P 500, Nike, Microsoft, Tesla, whatever it is, that can tell you more than anything else about where it will be a day, a week, a month from now. Again, it's a forecast, which means it's a probable statement about the future. It's not a prediction. I'm not saying the date and the time where something's going to happen. I'm simply giving a forecast, which again, a forecast is a probable statement about the future. So what happens when you eliminate the noise? What I want to do is look at the 4 largest countries based on GDP in the world and just quickly look and say, hey, if we eliminate a lot of the noise, how's it going? So the first one I want to look at is the S&P 500. Now, there's 2 squiggly lines on there. One of them is the 70-day exponential moving average, and the other one is the 70-day exponential moving average. But just kind of notice how even looking at a 70-day exponential moving average, there's a lot of noise. Now, I don't show the price of the S&P on here. I'm just showing you moving averages. But look at the 70-day moving average, much less noisy. Takeaway from this, S&P, the 70-day is still moving higher. The S&P 500 is still moving higher. Generally speaking, the GDP or the economy of the US is doing better. But even at the 70-day, which 70 days eliminates a lot of noise, you can still see how much kind of variation and volatility is in that information. But when you eliminate a lot of the noise, you can get a very clear picture, or you can get a signal of what is actually happening. Next, look at China. China is the 2nd largest country in the world based on GDP. And if we eliminate all of the noise except 2 things, a 70-day and a 161-day exponential moving average, we can see China is doing better. Should it be doing better? Should it not be doing better? Doesn't matter. It is doing better. It's going from lower left to upper right. And you can see with the green exponential moving average, which is the 70-day, you can see that there's some price volatility there. But even with the 161, it's moving higher. The 3rd largest country based on GDP on this planet is Japan. You can see with its 70-day, very volatile, lots of volatility there. And again, that's only 70-day. But when you eliminate everything down to just a 161-day piece of information, you can see, hey, Japan is slowly getting better. It's going from lower left to upper right, and it looks like it's accelerating. The last country, or the 4th largest country based on GDP on this planet, is Germany. And here you have a price chart of the German stock exchange going up, then kind of going sideways for the last half of 2014. But man, we moved right into 2015 and it just absolutely took off to the upside. The red line, which is the 161-day exponential moving average, it's moving higher. And the 70-day, which gives you a lot more noise, but actually eliminates a tremendous amount of noise, definitely was zigzagging and going sideways in 2014, but is moving higher. The biggest thing I want you to notice is what happens when you eliminate the noise. These 4 countries that I just showed you represent about 48% of the world's GDP. So almost half of the world's GDP, which I just showed you with these 4 charts, says, hey, things are getting slightly better. Now, should they be getting better? Should money printing be happening? Should all of these Federal Reserve equivalents be lowering interest rates, managing credit? I don't know, but they are. The bottom line is, what's the signal? Eliminate the noise, find the signal, and you have your answer. The takeaway, at least the takeaway from this weekend, is if you eliminate the noise and know how to eliminate the noise, you get the answer. You get the answer of which direction the market is going, which direction a sector is moving, which direction a stock is moving. And when you can get the signal, you can get the answer. And you can not let the advent of the internet or the Gutenberg press isolate you into some beliefs which may or may not be true. Hey guys, thanks for being here. This is just another step in helping you protect and secure your portfolio and your future. Until next time, this is RC Peck.